Welcome to SG Investment. Our channel is dedicated to helping you make informed decisions about your money and to guiding you on your journey towards financial success. Subscribe now and join our community of like-minded individuals on the path to financial freedom. Investment Strategy by Peter Lynch. Peter Lynch is a well-known American investor and mutual fund manager who developed an investment strategy that emphasizes the importance of researching and investing in companies with strong fundamentals and good management teams. He encourages investors to invest in what they know and understand, rather than trying to follow market trends or relying on expert opinions. 10 Investment Strategies by Peter Lynch. 1. Researching and investing in companies with strong fundamentals. Lynch believes that by thoroughly researching individual companies and their industries, investors can identify undervalued stocks that have the potential to generate strong returns over the long term. He suggests looking at a company's financial statements, understanding its business model, and evaluating its competitive position in the industry in order to determine if the stock is undervalued. 2. Investing in what you know and understand. Lynch encourages investors to invest in companies or industries that they have a personal understanding of, as this can give them an advantage in identifying undervalued stocks. He believes that investors who have a personal interest or experience in a particular industry or company are more likely to have a better understanding of the company's potential and be able to identify any red flags. 3. Avoiding market trends and expert opinion. Lynch also advises investors to avoid trying to follow market trends or relying on expert opinions, as these can lead to poor investment decisions. Instead, he believes that investors should focus on researching and understanding individual companies, rather than trying to predict the overall performance of the market. 4. Patience and long-term perspective. Lynch emphasizes the importance of patience and a long-term perspective when investing. He believes that investing in undervalued stocks takes time to pay off, and that investors should be prepared to hold on to their stocks for several years in order to see significant returns. He also suggests that investors should avoid the temptation to sell their stocks if the market experiences short-term fluctuations, as these are normal and should not be taken as a sign that the stock is overvalued. 5. Understanding the business cycle. Lynch also encourages investors to understand the business cycle of the companies they are investing in. This means understanding how the company performs during different stages of the economy like recession, inflation, deflation, and growth. A company that performs well during recessionary periods may be a better investment than a company that performs well only during growth periods. 6. Look for the 10 baggers. Lynch is famous for looking for the 10 baggers, which means the stocks that increase 10 times their original value. He believes that by identifying and investing in undervalued companies with strong fundamentals, investors can achieve significant returns of 10 times their original investment or more. 7. Active management. Lynch is known to be an active manager, meaning he regularly monitors the performance of the companies he has invested in and makes adjustments to his portfolio as needed. This can include buying more shares of a stock that is performing well or selling shares of a stock that is underperforming. He encourages investors to take an active approach to managing their portfolios, rather than simply buying and holding stocks for the long term. 8. Ignore short-term volatility. Lynch advises investors to ignore short-term stock price fluctuations and instead focus on the long-term potential of the company. He believes that a company's true value is determined by its underlying fundamentals, such as its financial health, management, and industry position, and that short-term stock price movements are often driven by market sentiment and speculation rather than the company's actual performance. 9. Look for companies with a strong competitive advantage. Lynch suggests investors to look for companies with a strong competitive advantage, such as a patented product or a proprietary technology, as these companies are less likely to be affected by economic downturns or competition from other companies. He also suggests looking for companies with a strong brand or reputation, which can be a key factor in attracting customers and keeping them loyal. 10. Trust your research and stay disciplined. Lynch encourages investors to trust their research and to remain disciplined in their investment decisions. He believes that by thoroughly researching companies, investors can identify undervalued stocks with strong long-term potential, and that by staying disciplined, they can avoid the temptation to make impulsive or emotional decisions based on short-term market fluctuations. Conclusion. In summary, Peter Lynch is a well-known American investor and mutual fund manager who developed an investment strategy that emphasizes the importance of researching and investing in companies with strong fundamentals and good management teams. He encourages investors to invest in what they know and understand, rather than trying to follow market trends or relying on expert opinions. Lynch's investment strategy includes researching individual companies and their industries, looking for undervalued stocks, investing in what you know and understand, avoiding market trends, having patience and a long-term perspective, understanding the business cycle, looking for 10 baggers, active management, ignoring short-term volatility, and looking for companies with a strong competitive advantage. Thanks for watching. Don't forget to like, comment, and share.